Hello everyone. It's a great pleasure for me to attend Huawei Connect 2020. Thank you for inviting me. 2020 is the final year of China's 5-year plan to promote financial inclusion. We have recently held many discussions on financial inclusion, reviewing the past 5 years of business and looking ahead to its development over the next 5 years and beyond. I would like to take this opportunity to share my views on this topic. First, during the past 5 years, guided by the National Plan to Promote the Development of Financial Inclusion, China has made remarkable achievements, especially regarding its traditional banking system. All types of banks, whether large, medium, or small, are fully committed to the financial inclusion in all areas. Of course, chief among these are the small and medium-sized banks represented by urban commercial banks and rural commercial banks. These banks have continued to provide financial services to small and micro enterprises and farmers. This is a deeper reach strategy. There are many good examples and showcases in this regard. One of the most prominent is that, under the guidance of governments at all levels, practically all administrative villages in China are now covered by service outlets, ensuring financial inclusion. The vast majority of services are provided by institutions such as locally rural commercial banks or postal savings banks. Therefore, thanks to the services provided to every corner to the country by these small and medium-sized banks, it's fair to say that the vast number of small and micro enterprises in China, especially in the countryside, now have universal access to inclusive financial services. This is hugely significant. The way the Chinese banking system is involved in financial inclusion is different to other developing countries, such as Bangladesh. Many other countries have basically taken the approach of abolishing the old system and establishing new institutions that specialize in financial inclusion. China, on the contrary, has mobilized all banks to participate in financial inclusion and made great achievements in this regard. In addition to the outstanding performance of small and medium-sized banks mentioned earlier, China's large banks, including the largest in the country, have made significant achievements. For example, China Construction Bank has identified financial inclusion as one of its most important strategic businesses for future development. Therefore, the bank has launched inclusive financing services across the country, both on-site and also online, in a comprehensive manner. The inclusive financing services provided by these large banks have displayed the strength of their capital, the advantages of their talent, and in particular, their capabilities in financial technology. These factors have allowed them to make significant achievements in a relatively short period of time. For example, the online fast lending service launched by China Construction Bank has already lent trillions of yuan, greatly influencing the landscape of China's inclusive financing services. This is one of the key achievements made by our traditional banks. In addition, because of the global development of financial technologies over the past 10 years, China's financial tech companies have made a big push to ensure financial inclusion and have achieved remarkable results. Three major technologies have been the obvious driving force behind the development of financial business in China. One is artificial intelligence, which has greatly enhanced capabilities to process data and information. The second is internet technology, which has removed barriers related to data transfers. As long as we can access internet technology, we can communicate with each other face-to-face anywhere in the world. The third is smartphones. Smartphones have seen remarkable technical achievements in terms of interactions and receiving data, allowing every individual with a mobile phone to send and receive incredible amounts of information. As there have been significant breakthroughs in all three of these major technologies, the business models used by traditional banks and traditional financial institutions face obvious challenges. This means financial technology is very well positioned to be introduced into the field of financial inclusion. In this regard, China's financial tech companies, especially those with large platforms, have made remarkable achievements. In the earlier stages, they made it impossible for traditional financial institutions to ignore financial inclusion through the catfish effect, and these companies have become indispensable to financial inclusion in China. These are just some of the remarkable achievements related to China's financial inclusion over the past few years. Of course, these achievements would have been impossible without strong infrastructure. Over the past few decades, the Chinese government has attached great importance to building infrastructure for water, electricity, gas, transportation, and especially communication networks, placing China at the forefront in this regard globally. China has also been prominent in terms of popularizing the internet. With a mobile phone in hand, people can easily access financial services anywhere in the world, even in remote rural areas. Therefore, building infrastructure is critical to the development of financial inclusion. In addition to physical infrastructure, there is also a huge amount of financial infrastructure, including laws and regulations, payment and settlement systems, credit systems, and information sharing platforms. Over the past 5 years, we have made significant progress developing all these areas of financial infrastructure, based upon which our financial service providers can offer inclusive financing services. Of course, we also recognize the unique role that startup companies and private entrepreneurs have played to advance financial inclusion within the distinct environment of China's market economy. Looking to the future, there are likely to be new trends. Following my own observations, I believe there may be new trends in 3 areas. First, we have made remarkable achievements regarding China's financial inclusion, especially in terms of digital financial inclusion. However, we are ultimately going to require a combination of what we call online and offline, that is, integration and cooperation between financial tech companies and traditional banks. This may be a trend in the future. Our finance is essentially a service industry which needs human-to-human communication and exchanges and cannot rely entirely on machines. Therefore, a combination of online and offline may be the most viable direction in the future. This is the first trend. Second, in promoting financial inclusion, our government may start shifting the focus from solving financing issues to take further steps, such as improving financial literacy, expanding financial education, strengthening the development of financial capacity, and protecting the rights and interests of consumers, particularly financial consumers. Over the past 5 years, one of the key principles during planning has been that the government leads the market. In the next 5 years and beyond, I think the government will continue playing a supportive role in terms of financial policies, guarantees, and subsidies, while placing more emphasis on developing financial capacity. This is likely to be another major trend of development. Third, financial inclusion is not simply limited to credit, as if it were just a solution to financing issues. In fact, financial inclusion started with payment innovations and developed to address today's digital credit. Moving forward, financial inclusion may be applied in digital wealth management, digital insurance, and even the capital market. Considering this, we need to build an ecosystem for financial inclusion. For example, small and micro enterprises under financial inclusion will generate many credit assets which will be able to enter the capital market through securitization. This will then allow more investors in the capital market to participate in financial inclusion. Therefore, financial inclusion will require an ecosystem in the future. Different types of banks and financial institutions have different functions. Some may be wholesale, some may be retail, and some may specialize in a certain part of the ecosystem. But they ultimately complement each other and cooperate to create a harmonious ecosystem. This may also be an important direction for the development of financial inclusion in the future. Overall, China has made remarkable achievements in the development of financial inclusion over the past 5 years. Globally, China is at the forefront in terms of digital financial inclusion, which is clear for all of us to see. Of course, when considering higher demands, there is still a long way to go. And we still have a huge amount of work to do in financial inclusion over the next 5 or more years. This is especially true in terms of improving quality to meet higher standards, and there is still a lot of room for development. For example, we should aim to enable Chinese people living in rural areas to buy public funds and common funds as conveniently as people in urban areas, so as to participate in social investment or access different types of insurance products and services. Then we will be able to say that our financial inclusion has entered a new phase. In this sense, we still have a lot of work to do. Therefore, I would like to encourage you all to work together for the development of financial inclusion in China. Thank you.
More than 50 years before our country began her journey, we began our own, walking with our customers all across the developing land. We were there on December 12th, 1963, and we've been here ever since, helping Kenyans everywhere buy homes, educate children, build businesses, spend, save, invest, innovating new and easier ways to bank. Today, we share these opportunities not only with Kenyans, but also with our neighbors right across the region. And as we look to the future, we proudly pledge to continue on our journey, side by side with our customers, unlocking tomorrow, today.
My name is Joshua Igara, the Group CEO of KCB Group, which is the largest financial institution in Eastern Africa. We've been in business for a long time, more than 100 years old. We were set up in 1896. And I think what has happened in our business and in our industry, as you see globally, is technology and fintech and innovation has changed the way banking generally operates here. And with the increase in mobile banking, access to mobile devices, platforms approach has come in our markets, and happy that we're working with a lot of partners, especially working with Huawei in terms of developing extended payment systems, lending solutions, integrating all our applications. And I think that's what we see as a value of creating an ecosystem for our customers. It's something that is fast in our market. So if you look at East Africa, we stand very far with an access of almost more than 20 million customers this year. Most of them on the mobile. Nearly 98% of our transactions are happening outside the branches. So it's a commendable progress that you see. And at the end of the day, what we have seen in the last 10 years, or specifically in the last 5 years, is digitizing financial access, enhancing inclusion, democratizing access of financial services, even to the little micro, nano entrepreneur in our industry. That's what the value of our organization has been, and we'll continue to do that. So, there are very few organizations which are 100 years old, especially in this continent, and also in the banking sector. So I would say our vision has always been trying to build collective solutions with our customers and grow with them. And our strength is because we are the largest corporate institution, so we deal with the wholesale customers. We are also the largest in consumer banking, so in terms of individual facility, we are the largest mortgage and long-term lending and the largest trade finance bank. And now we're becoming a very strong, eclectic player in the mobile payment space and also in the mobile banking. So the reason why we do that is we work across all aspects of a customer's footprint. We do bank the larger customer, and we also do bank the entire value chain. And this is why a platform or an ecosystem solution helps customers. If I am a small trader, I can be able to transact with a larger manufacturer and in the process use technology. So we started investing in technology many years ago. We started with the basic, a mobile banking solution, right? And in those days it was running under the old model of text messaging, which is called USSD. We now migrated into app-based solutions, building an API integration framework for all our business, which is something we're working with Huawei to do. And for me, that is, we've seen progression. And as mobile phones become, especially smartphones, become more accessible in our region, we now estimate penetration of 40-50%. I think the solution will always be greater. So we have got more services we can offer, not just on basic checking your account balance, but we are now building advanced analytics. So customers, you can determine their loan limits, you can determine their saving amount in their product that they have. You can almost predict what the customers will do in terms of the transactions in the institution. So with more product offered, I would say we brought in the last 5-6 years, we've done big programs with M-Pesa especially. So I'm a big fan of partnerships. So KCB M-Pesa was created more than 5 years ago. We have 15 million customers. We created Fuliza, which is another product, which is a lending product as well with M-Pesa, which has got another 20 million customers. And in that process, these two channels or platforms have the single largest throughput in terms of transactions per second. You know, we used to say that we issue a new loan every second, 2 loans every second. So the reason why we must expand our investment, is to ensure that transaction speed and velocity are delivered through a better platform, and that's what we've built with our partnership with Huawei. Now, if you ask me about where the future will be, I think this is where what we see as banking as customers go. Customers do. Customers exploit the opportunities. And so we will continue to provide the innovation. We do invest today up to 10% of our investment into technology, into innovations, into investment. So that for me will be a fantastic way. And then integrating trade in our regions, whether it's on e-commerce or mobile commerce, to ensure trade happens. If we do that ecosystem, we build our economies. And that for me is what our bank stands for. And that's where we made success so far. I would say 2 things. Inclusion is perhaps the only way to create access and enhance. So in the past, we talked about financial access. Now we talk about financial inclusion, correct? Because you can provide access, but if people don't have ways of reaching you, then they cannot get the service. So the contradiction has been that we must be willing to invest strong. So we have many banks, yes, that is true. So what we call banking per capita, we have a bank per million, which I think is extremely, extremely low for this market if you compare economies of scale. And that's the reason why we also see the contradiction. Because you need more people to financial institutions to reduce the cost, reduce the operations, enhance access, create more innovation channels. So that's one area. We've also seen partnerships, companies or financial institutions like ourselves, which are bold enough to work with technology companies. Whether it's working with Huawei to build platforms or working with M-Pesa and Safaricom to be able to have joint products, or even working globally. This is important for us, that we can't run the race alone. So the challenge for the industry is that if we are not, and I speak as the chairman of the Kenya Bankers Association, which is the largest industry group in Eastern Africa, if we are not prepared to invest a lot of our resources to provide access, most likely we'll be left behind. And that's what has happened. In fact, if you see the whole industry data, we are consolidating financial services among few banks. So if you look at the top 8 banks in our market, they are actually going to be 75%. So 3/4 of customers are concentrating. And my prediction is that this will disrupt the industry as you go forward. And you will see more mergers, more consolidation, and fewer banks in the near term. And we are talking about 5 years. Yeah, so I see that issue. And yet it's a good win. If you don't have to do all these things yourself. Can we partner with players who have got the capacity, the resource, the knowledge, and the competence to build those platforms? That is what will change the industry. And we've seen that in other markets. In Nigeria, we've seen a shrinkage of banking footprint. Yeah, we have fewer banks. We see that perhaps the country I see most changes is South Africa, yeah, where we see fewer banks, 5-6 banks, which are driving a lot of transformation in the industry. So that will be the rationale, I would say, which is critical for us. And for me, Kenya is known as a very strong part of the world in financial innovation, largely because of M-Pesa. What is not spoken about is that banks are collaborating with the global technology players to deliver solutions for their customers. That's where we can be a catalyst, and that is what KCB is doing. That democratizing access of technology has been a big driver. Consumer patterns are changing dramatically in the last 5 years. Although, we are an M-Pesa country, which means we learned how to use mobile to disrupt financial services more than almost 20 years now. But in the last 5 years, we've seen, even in this crisis, we've seen customers consolidating their access to information, and financial services are not be left behind. So that's one area which is driving that kind of change. And number two, we're also seeing a lot of entry of new players. There's stronger competition coming into our market, largely from financial technology companies, which are called fintechs. And also we are seeing big technology players in the industry, both globally. And Kenya is a very nerve center of innovation in technology. As that happens, banking is changing. So give you our example. Today, up to 98% of our transactions, daily transactions, happen outside the branches. That's the revolution. So as that happens, we need to invest much more in this solution. So that is another area of what is changing. And banks are investing more and more in technology to drive the future relevance of their customers. So now we look at revenue per customer. We look at churn rate for customers that we have. That's really what is driving the change we have. And then lastly, because more and more customers are coming into the banking platform, we now have in the region, more than 100 million customers, correct? As an industry, not KCB. In our market in Kenya, we have more than 50 million customers, correct? As an industry. So as more people come into the financial sector, you are consolidating the activities they have, and that is pushing the nudge for innovation and disruption because of technology. This has been extremely good for us, and I will speak because of the work we've done with Huawei in the last 3 to 4 years. Because as you build an ecosystem or you build an architectural platform that helps you achieve customer needs, you need partners who have done it before, have a global expertise, and have got other partners they can pull along. So the days of building alone and achieving a vision as a single organization, that will not be successful. Yeah. So our role has been that we have been very open to build different revenue sharing models with our partners. So we don't see our engagement with Huawei today, for instance, as just getting a contractor or a service provider. It's way beyond. We're co-creating solutions today. We are sharing the success of those solutions. Some do fail, but net, we achieve a bigger revenue pool, share that revenue, and progress. This is the new model of partnership. Sometimes there's contradiction, but I presume that leadership, and at my level as a CEO of the group, this is where the true value can be created. I give you a good example. When we worked with our partner Safaricom a few years ago, we created a $1 billion new business. It wasn't possible for us to build it singularly, alone as a business. So that's what I will be able to say. But lastly, that the partners we work with should also be able to have global capabilities and networks to pull in strong platforms, have a very strong architectural platform for them to use, and finally, can pool resources from multi-country, multi-skilled, multi-language to build a model that works. Because it's very important. Banking is not today commoditized. When I look at Rwanda customers, Uganda customers, Tanzania customers, Ethiopian customers, at the end of the day, the way they do banking is different. But what they really need is a platform that gives them what they need today. And that's what, for me, I would say is a winning formula. So not every bank has moved, but I presume our greatest success as a bank has been getting partners and being bold enough to work with them towards providing the solution. So I would say a lot of us are still unsure. There are banks which have taken a wait and see, because they want to build it alone. I would say that's a long journey. So it's important to look at what is available. As you build, strengthen your capacity to enhance financial access, it's important to be open with the new emerging technologies and new partnerships. So a lot of our fintechs have come in solo with a singular objectives. I'll only focus on one area, lending. I focus on another area, savings they're not doing, payments they're not doing. Now, if you build a platform that builds together an ecosystem around these channels, this is how the winning formula can be achieved. Whether it's a financial services sector ecosystem, education sector, trade, tourism, agriculture, these are the different areas, and this is what we are building on it. Yeah? And so when I think about building like a basic app, today people are talking about creating a super app that integrates many solutions the customer is looking for on a back-end point of view. So this is, for me, I would say, there are enough partners today globally that you can work with and plug in with solutions of plug and play. That has not happened before. Now, if you continue the old model of waiting to build it alone, getting the resources. Well, by that, what we measure today is speed to market. How fast are you to respond? And this is where I will conclude by saying that we've seen tremendous amount of innovation with our work with Huawei team. We've been quite adaptable in the approaches to the industry and the market products we've created. And that has created value for us. And we have been able to jumpstart. Actually, we jumped ahead of the queue. And that is what institutions in our sector will require today. Those that are willing to adapt, and it's also a cost-effective model. You can say, I don't have enough resources for this CapEx. But if you have a partner who is willing to share for you the benefits of their innovations, and we've learned new things. We've learned about models that have worked in Asia. We've seen models which have worked in North America. We've seen models which have worked in Europe. And that global partners bring them into ourselves. That, for me, will be the stepping stone that we need to catalyze the changes in our industry. And for that, we are saying that if you think about the next 3 to 4 years, we believe that mobile and financial inclusion will deliver up to 40% of our revenue for our business. We're a $1 billion company. So that is a significant step in our business in terms of transformation. And I'm happy that we're in that journey. We have a long-term partnership, a long-term commitment, and I think that's what will make us successful as a team in terms of changing the landscape of financial services, not just in Kenya, across the region, and finally across the continent. Thank you. So we see that there is a complete merger between banking and technology. Will it be payment solutions? Will it be telecommunication solutions? That space, we're seeing a complete merger, of those two sectors. And I believe that is where our investment is going to be. So we have to be prepared for scale as our institution. So we are building strong partners with the telecom companies, strong partners with the individuals who are in the technology space. Those two, and as customers, we're already there today. More than 98% of customers access our services outside of traditional channels. So it's making sure that we are able to have integrated platforms today and also bring in more services. So just traditionally, we have been doing just lending. But there are payments, which I think is a fantastic industry today. If you can digitize payments, even by a factor of 5 to 10%, you create $1 billion shilling businesses in the whole industry. And that's what we are going for. I don't think our market will be without cash. Today, we are 95% cash. We need to push for cash light, or what some people call cashless. In our market, cashless is not possible. We have to move in from 95 today, maybe to 90%, maybe to 80%. In that 15%, you have $2-3 billion worth of revenue. This is the focus we are running for. And then finally, as we then integrate different industries into that infrastructure, we can then go beyond just financial services, where we are very good at. We think there are new sectors will emerge. Education is a very good one. Agriculture and agribusiness is a new segment we have not addressed. Hospitality industry is a new one we have not addressed. Those three. And finally, trade, whether it's e-commerce, especially, and mobile commerce. If you integrate that all, I think in that segment, you could almost be able to build our businesses, triple the size of our businesses in 5 years. And that's what we're pushing for in this decade.
Hello, my name is Huck. I'm the VP of Mobile Financial Services. Today, I will share a topic about digital payment cloud solution with you. This solution consists of 3 modules. They are the e-wallet, the mobile payment platform, as well as the finance platform. This is a solution meant for banks and financial institutions that would want to venture into mobile payment business to create competitive advantage in digital financial inclusion. Banks face challenges to compete in digital age. Traditionally, the banks do not target the underserved group, and hence they are lagging behind the acquisition of the underserved group, and they are also facing challenges in acquiring new customers in the middle class and even the upper customer class. So there are a few strategies that they need to deploy to create new acquisition strategy, to create new retention strategy, to drive profit. In terms of retention strategy, new digital experience need to be created based on the new service innovation. In order to reduce cost, the bank need to digitize. Otherwise, they will be lagging behind competitiveness. It is known for the fact that for the last 8 to 10 years, fintech companies has been leading payments and mobile money. In other words, the bank needs to step up. They have been losing market share from gathering information and also customers in this segment. As you can see on this chart, players such as WeChat and Alipay have been in the market, creating huge wave of innovation. Combine these two players, they have more than billion of users in China. Elsewhere around the globe, there are fintech companies venturing into mobile payment space, and hence the banks need to either defend or create a strategy to attack. In order to create payment ecosystem, the banks need to consider what is the new ecosystem platform that would help them to boost revenue. On the left side of this chart, it is evident that payment is not just a transaction event, but venturing into mobile payment, the banks would have the opportunity to digitize their business model, to create digital deals that are more responsive, that are more targeted for clients in different segments, and also to be able to work with vertical industry players to create different payment use cases. On the right side of this chart, as you can see, mobile payment platform has few components. It has the core platform that has the account creation, which is basically the wallet, the finance platform, and the payment core platform. And from the surface, the customer experience engagement would involve modules such as consumer app and merchant app. Now, this platform would play a critical role to connect different actors and players in the ecosystem. They are consumer, merchant, as well as other actors such as the public agencies, social media, funds providers such as other financial institutions or insurance companies, as well as supply chain players. The platform would manage information flow throughout the transaction in the value chain, the funds flow while the payments completion in the transaction, as well as commodity information. So the banks need to rethink their role in mobile payment. In terms of business model, the banks will need to look beyond transaction revenue. In other words, they need to become a platform economy player. Traditionally, transaction fees generated through a payment event consist of a significant revenue. However, they need to change to become a platform players, leveraging on data, leveraging on the platform capability such as credit risk scoring, analytics to create new use cases, and hence create new value in the value chain. On the left side of this screen, as you can see, data is at the heart of the platform value creation, surrounded by wallet, payment, and finance platform. So, the new value creation for mobile payment for banks include initiatives such as consumption creation, upgrading of consumption behavior. Number 2, new service digital experience that need to be considered. And finally, to achieve financial inclusion in the financial segment for different customer segments. KBZ Bank in Myanmar is our customer. Huawei and KBZ Bank work together closely to innovate payment market operation, leveraging on Huawei platform as well as experience in market development and operation. Now, KBZ has been the #1 bank in the traditional segment, and they have set up a new digital payment organization. We have helped them to launch mobile payment within 18 months. We have grew from 0 to more than 6 million registered customers, achieving more than $7 billion transaction revenue. What are the key success factors in these projects? So there are 3 key areas, including digital experience, ecosystem development, and also the platform, the technology platform itself. In digital experience creation, we have created new online onboarding modules, leveraging on KYC, new technologies such as facial recognition, automated onboarding. We have worked on new payment methods. There are more than 10 payment methods. And also we leverage on new marketing platform and capabilities. In terms of ecosystem operation, it covers both online and offline ecosystem partner onboarding and use cases operation. We have more than 10 different scenarios, more than 1,000 partners, more than 200,000 merchants being onboarded in the ecosystem, created a very significant impact in the market, and hence is achieving #1 in the market share. Now, the platform itself gives KBZ the opportunity to scale without limit, and we were able to launch new capability in a very agile manner. So where do Huawei sit in terms of our market presence? So Huawei has been in mobile money, mobile payment for almost 8 years right now. And as you know, the industry for mobile wallet has been around 10 years. Today, we have more than 260 million registered customers running through our platform in more than 20 deployments. There are quite a number of banks in the developing market, such as Bangladesh, Myanmar, Kenya, and Nigeria, that are leveraging on our platform. And we look forward to work with more banks and financial institutions to help you to launch mobile payment platform. We have received various recognition over the years, including Mobile World Congress Award in 2018, ITU Award 2019, and AfricaCom in 2019. This is a page where I will show you very quickly about our solution of the digital payment platform. So the platform is built with the super app architecture. It is designed for ecosystem development. It has covered traditional wallet features such as money transfer, international remittance, and finance capability such as digital lending, insurance, as well as payment for online and offline merchant with more than 10 different payment modes. It serves both consumer and merchant. So there are 3 distinct highlights of the solution. #1, it is based on digital architecture to create extreme experience. By digital architecture, what we mean is that it is using the data, it is using digital architecture that would create scenario to support best user experience. Among them, technologies such as Kafka that would give you online reporting of data streaming, AI analytics tools to create new scenarios such as credit risk scoring, and it is based on the super app architecture where new capability could build around it. The second highlight would be the open ecosystem architecture that would expedite the onboarding of partners' use cases to create lifestyle payment environment. The key capabilities are open API environment that are published, the H5 development environment that third party or your developer could build new application around the core, and mini app as well as UI bricks. The cloud native architecture would help you to innovate in a sustainable manner. It is container based, create auto scaling capability, and would be able to help you to launch grayscale releases to test your new releases. All right, so this is a slide that I will show you a quick demonstration of our mobile payment solution. This is the app for both user and merchant. So the first one is the user app. It is a demonstration of a long-distance bus ticketing ordering platform. As you can see, it is based on local language in Myanmar. We have opened up the platform, and the local partner would develop the ticketing ordering platform on top with a seamless experience. Okay, and it would complete the payment process. The client will be selecting the ticket. Okay. So the benefit of this platform is being shown here, right? That it will be able to onboard local use cases with local partners, right? All right, and then the second use case is about an online game. Mobile Legend game is quite popular in Asia and probably elsewhere in the world. And we have worked with Mobile Legend as well as KBZ to create payment use cases, payment scenario within the game itself, as well as selling coupon for consumer to top up their game credits. And the third demo on the screen is the merchant app. So this is a digital experience for retail. It is an opportunity for retail to have the first-hand information of their daily summary, daily payment collection history, as well as membership program, membership registration, coupon in one place in the merchant app. As you can see, this is just a portion of our total solution for mobile payment. The mobile payment will consist of the app, both consumer and merchant, and the back end is the payment platform, the wallet, and the finance platform that would enable all the different use cases that would help banks and financial institutions venture into mobile payment business. And I hope you have enjoyed my presentation today. I've shared with you the mobile payment solution, including the payment app of consumer and also the merchant. The whole platform would enable you to go to market rapidly, to acquire a customer and your merchant in a very effective manner. Thank you.